All right. Hey, everyone. Mark here. Thanks for joining me. Today's Monday. Let me explain to you how this stream works if you're new here, and welcome. So, I know I'm running a little bit behind today, but I made sure I put that in when I rescheduled it. So, I apologize for that. I usually start a little bit earlier. But here's what we're going to do we're going to run through Bitcoin real quick, right? Then we're going to talk about the other markets, and then we'll see if we have any uh, possible Trade Scanner Pro trades, if there's anything that the Trade Scanner Pro can tell us. If you would like to see a chart and have me analyze it, just ask me in the chat here. Just put the symbol, could be a stock, it could be a coin, it doesn't matter what it is, as long as I could look it up here on this platform, and just put long or short in front of it. So letting me know like what side you're considering. Okay. So for example, if you're interested in Microsoft, you say, long Microsoft, and then I'll take a look at Microsoft from the bullish side. All right. So it's relevant for you. Hey, Savi from Brooklyn. How you doing, Savi? Good to see you. I know you don't talk like that, Savi. How's everything? Good to see you. Thanks for stopping by. All right. So interesting things happening in New York City these days, huh? You may have a new situation over there with your political situation. DJ, how are you? Good to see you again. All right, thanks for stopping by. We got Kai. All right, hey guys, good to see you all. I'm sorry I've been running behind today, but Monday's a pain. But anyway, all right, cool. I'm glad to see everyone here. Long Bitcoin, 120K. Oh, 109K. Okay. All right, Sabi. Well, yeah, we're going to get right into Bitcoin first. So, hey, Nugs, how are you? Good to see you. All right, all my old timers here. All right, cool. Good to see you guys. So, let's begin with the economic calendar. All right. So we have an idea of what's important this week. There's really only one important thing this week that's worth mentioning, and that is the FOMC meeting on Wednesday. Right. So this is a highly anticipated meeting. Powell has hinted, or whatever, it's been in their minutes or whatever, they're basically expected to cut rates by 25 basis points on Wednesday. And of course, during the press conference, they're going to be expecting to hear more about this quantitative easing. Powell has hinted at a recent speech that he gave, right? They're going to do balance sheet expansion or quantitative easing, which is another way of them saying printing money. Okay, cool. Got it, DJ. Trox. All right. So we'll definitely take a look at that. So now the market has just been in ridiculous mode. All right. We gapped up today, right? So basically, we have that coming out on Wednesday. And other than that, I don't really think anything else matters this week. And the key to that is because some people may think, whoa, the market must have more to go since he hasn't cut rates yet and the market should rally on that. Well, no, it's priced in. So what's going to move the market is the press conference, which is at 2:30 p.m. Eastern time. You have to pay attention to that because they're going to ask him questions. And Powell's very clever. He always makes sure to say kind of yes and no. Like, he never really gives too much certainty, especially on stuff that the market doesn't want to hear. He always plays nice with the market, it seems, from all of his meetings and all of his press conferences. Right? He tries to keep it even. They even asked him about gold in a recent interview. They asked him his opinion on the price of gold. And he said no comment. So, why couldn't he tell us? Why couldn't he talk a little bit about gold? Because it probably wouldn't have reflected well on him and his decisions, because gold is basically the enemy of a central bank. So anyway, so just to keep that in mind. Now, he is expected to talk about quantitative easing. He's hinted, whatever. So we're expecting to be swimming in cheap money very soon. And there seems to be no way around this. And if that's the case, we're just going to see any pullback that we get, whether it's in Bitcoin, stock market, whatever, most likely we'll find a bid. Most likely it's not going to pull back for long. So even though we keep pushing all-time highs, sure, I believe we'll have pullbacks, but small ones. Relatively small ones, like the Trump one we had a few weeks ago, right? It was a one-day thing, and that was it, right? Yeah, Alex from Romania. He's here. Alex from Romania. I was waiting for him to show up so I could say Romania like 10,000 times. How you doing, Alex? From Romania. It's good to see you. All right, I'm messing up my camera's messing up over here. I'm saying Romania too loud. Excuse me. I gotta fix that, man. This thing has just been a mess today. You know, the camera. Let me see if I can fix that real quick. How do I even fix that here? Hold on a second, you guys, because I don't like the way that looks. This thing is it's been such a pain today. But now that Alex from Romania is here, I'm very happy. All right, maybe it's this. There we go. All right. That should do it. Okay. That's better. From Romania. All right. So, yeah. Okay, cool. So, anyway, so that's pretty much it. Now, if we're going to be swimming in cheap money, again, we're going to probably see any hard assets are probably going to hold up at least, right? So, the best thing to do in this environment, in my opinion, especially on these larger time frames, is to just analyze support levels. Chances are we're going to hold support levels. Chances are we're not going to break them, especially on the larger time frames. You know, if you're working on a small time frame like a day trade time frame, sure, your support levels are going to break. But on the big picture, we're not likely to break 105, okay, or 100 if we test those levels, right? So that was the point of my article yesterday on TradingView. If we're testing a level, you want to wait for a test. And if we get one, you want to watch carefully because that's where it's likely to reverse. All right. So with that, let's segue into Bitcoin here and let's talk about this Bitcoin chart, right? Because this was the chart that I published on my article yesterday. And as you may notice, here, let me get my little arrow. I drew a new resistance level, right? I drew this line yesterday. We touched it. This was before price was even near that line. Okay. When I was writing my article, we were over here, right? We were around 114 or 115 area, flirting with 115, right? And this stupid thing made a high of 116,410. Now I had a line drawn in that area. Okay. This is a minor resistance. Now, and I wrote, like, if you're super aggressive and you're looking for reversals trying to short this thing, well, this would be the area to do it. And you're getting the pin bar now, right? There was no pin bar yesterday. My point yesterday was there was no reason to do anything yesterday because we had nothing. All we had was a strong vertical candle. Here we are with our pin bar, right? Candle has to close. So it's not officially a pin bar. And then we have to break below the pin bar. That becomes your sell signal on this time frame. Now, am I suggesting you short this thing? I wouldn't. All right. But that's just me. If you're aggressive and you say, hey, I don't mind taking the chance, that's up to you. Right. I don't expect much of a bearish movement on this thing. Right. Because again, all we're facing is cheap money. Right. And then we're going to start to see the 10-year yields. Going to watch those yields because you're going to see changes there. Right. You're going to see changes. If we're getting cheap money, then they should be coming off. Right. The yields should be lowering, right? If we're seeing that, okay. But if we run into other problems like with the 10-year yield, meaning like home prices is a problem with home prices, you may see the yields do things that may not make sense relative to the Federal Reserve's movements. Right, that's an important thing because that thing trades on its own. The Fed can only do so much to affect it. Right, when they change their overnight rate, that affects the short-term maturities. The longer-term maturities are more of a free market. They'll be slightly affected, but they're not going to be. It's not going to be the same effect as like the 2-year note is going to have. Right, so that's important to mention here because quantitative easing, which is going to be important for Bitcoin, is basically what? Fed buying treasuries. That's essentially what they do, right? That's another way of printing money. So they can buy treasuries and at the treasury auctions, right, buy them all up, and that's going to lower yields, right? Because they're buying bonds and bond prices should go higher, right, if they're doing that. That's called balance sheet expansion. That's one of the ways they can do it, right? There's many ways they can do it. That's one of the ways. Hey, Peter, good to see you. How's your gold position doing? I remember you came here a few weeks ago, talked about gold. So anyway, my point is this. This is why I mentioned the Fed when I have a Bitcoin chart up here, is because if Bitcoin pulls back, which we can see, it can easily pull back, I wouldn't expect this thing to break supports. Not in the face of all this easy money on the horizon. Also, with this easy money talk, I mean, it could be a recipe for alt season as well, right? Because that's what cheap money typically does. But which alts? Who knows? It always shifts to new whatever's in the feeling at the moment, right? Is it going to be the AI ones? Is it going to be other ones, gaming ones, whatever? I don't know, right? That's what you have to watch. You have to watch the universe of them to see where the money's flowing. But it's always just like whatever the flavor of the moment is, right? Now, I want to point something out. This 113K, you see that? You see that rejection off of 113K? We had a swift rejection, and I also pointed this out in my article. We had this swift rejection. So that's what I mean. Like if you were shorting something like that, that could have been worth something as a day trade or maybe as an aggressive swing trade. And we may see something similar to that over the next week, right? Even with in the face of the Fed announcement. Nice, Peter. Nice. I mean, over the long term, you should be good with that. We were just talking about the easy money flow that we're expecting. Now, watch the press conference on Wednesday because he'll likely hint on that whole idea of the quantitative easing. That's what everyone's going to be looking for. Now, if he says something that the market doesn't like, I think it could be brief, and that's maybe where you'll see the pullback. Okay, maybe you get something like that. He should also be hinting toward the December meeting. He's expected to cut there too, right? So any changes or any if there's any confusion about that, you might see this pullback here. That's why I keep mentioning the Fed, because that's our biggest catalyst this week. All the other stuff on the economic calendar is going to be pretty much minor because the market's going to be waiting for that event, right? And we don't have anything else. We don't have non-farm payrolls. We don't have anything like that. So, in the CPI report, which came out on Friday, obviously the market loved it because the market, it showed that inflation was a little cooler than expected or whatever, or something like that. I don't know. I don't believe in that CPI report. I think it's a lie. I think it's completely inaccurate. But you know what? It doesn't matter what I think. It matters how the market reacts to it, right? So we had the market strong on Friday. We had a gap up yesterday, right? Sunday, I guess because of the Asia stuff, whatever's going on in Asia. I don't even know the exact reason why it gapped up. Maybe one of you know. But I think it's nonsense. I think it's nonsensical and I think it's overdone. But again, it doesn't matter what I think. So my point is watch for this pullback. Okay. Now, I drew this illustration here to 109K, right? It's the 109K area because I believe there's a minor support area. I mean, if you look back, just look at all this, look at all the price action touches in the area. Look at this, right? You had touches here, right? You had touches over here. You had plenty of touches over here. Look at that. So I believe that that's a nice inflection point, a minor inflection point, which means there may be some good day trade opportunities in that area or swing trade opportunities. Like if you're looking at a larger time frame, right? Like maybe a 4-hour chart or a 1-hour chart, and you get a reversal in that area. Watch for that if you're looking for pullbacks. So now Peter Schiff tweeted that gold is better than Bitcoin. Yeah, it's funny. Yeah. Well, gold overheated anyway. Gold was overdone, but it doesn't mean gold is reversed. I strongly believe it's going to take a lot to reverse gold. People were pooping in their pants when gold pulled back those 400 points. It's like, man, you guys are a bunch of, I don't want to say the word here because I don't want to, you guys are a bunch of little girls. I was going to use a more vulgar word. But come on, man. The amount of that gold is up. Okay, it's going to pull back, man. So it went from 4,400 to 4,000. I know that's a big move for gold, but come on, man. If you're long from like 3,000, what the F are you complaining about? So anyway, how is it these guys tweet mega bullish exactly at the top? Well, you know what it is? It's a sign of sentiment. it's a sign of sentiment. When usually it's like when Captain Obvious puts his hat on and be like, buy gold, right, at the top. It means all the buyers that we're going to buy are, that's it. There are no more buyers, right? That's usually what that's a sign of. It's like when you go to the barber shop and they're like, hey man, I heard gold is a good I heard gold is a good long. Yeah, right. At 4,400. Anyway, all right. You get it, DJ? All right. Yeah, you know what I'm getting at. So anyway, back to Bitcoin, right? That's why you can't get caught up in that sentiment nonsense. That's great if you have an algo that can read it and then read other things and take a trade on it. That's what that stuff is great for, right? You have quants who basically sit there all day and mine data and figure these things out, right? That's what I learned from Roman Paolucci when he talked about using. He had a whole seminar about using emojis to gauge a sentiment like on a stock. Right. So he explained the whole process of the data mining and all the stuff that goes on for them to actually get a read on should we buy or sell this stock based on the amount of emojis and the type of emojis that have come out over a period of time. Right. So that's what that's good for. Other than that, it's not going to be helpful to us as retail traders, in my opinion, because all it's going to do is cause confusion. This is why charts are a better choice, right? Because charts are pretty clear. We're either at a level or we're not at a level. We see some type of reversal pattern or we don't see some type of reversal pattern, right? So again, we have the reversal at this resistance that I pinpointed. It's a minor resistance, which means it's likely to break, especially in this environment. We have to understand that things are generally bullish, right? So if things are generally bullish, resistances are likely to break. So when you take a short, if you're taking a short, you have to be more cautious. Perhaps take a smaller position. Perhaps put a limit order further out in the market so the market has to work harder to get there because it's likely to get there. But if it does, you're likely to get a better price if it turns, right? But that's a tricky game. I'm not going to talk about that. What I'm talking about is you have an inflection point now with a reversal signal, which is not official yet, but it looks like you're going to get the close. This thing closes at what, like 5 o'clock Eastern time? This thing closes with the pin bar. If it breaks the pin bar low, you have something at 114,362. That's the low, right? That's your confirmation if it occurs. Okay, it may not, but if that's it, and if it occurs, then a possible take profit would be the 109 area. If you're not into shorting it, which that's cool, I understand, then you're looking at the long around 109 possibly. That's the first area I would be looking, 109. Okay, this area right here. If that breaks, which it can, because 109 is not a major support, if it breaks, you're looking at 105. Okay, so obviously I think this should answer your question. You said long Bitcoin, I think you said 109. Yeah, 109. So 109 is the inflection point that I'd be watching for next for a swing trade long. And if it reverses there, then you're looking at 113, 116, 118. And those resistances are more likely to break. Now realize Bitcoin is not exactly in a trend on the smaller time frame. We're in the middle of the range. Like this hasn't really changed much over like the recent few weeks. If you think about this, right, we're still inside of this range, right? We haven't done anything. We're just jumbling around. So at the range low, big buying opportunities, right? Every time we touch a range low, I always talk about that. You guys know that, okay? You have to take a chance. There's no way to know if it's going to hold, but since we have a lot of fundamental arguments, if this thing, even if it breaks 105 or it tests 100K, there's going to have to be a very powerful catalyst in order for it to continue to do that, right? Because everything leans toward this thing going higher, right? So that's why the supports are going to carry a lot of weight compared to resistances. Does that make sense? So if we break above, right, those resistances, they're likely to become support. So for example, if we get back up into the 120s, which is likely in the next few weeks, and we pull back, 118 is going to be a support. 116 is going to be a support because those are former resistances, but they're minor because they're inside the range. Those support and resistance levels are more appropriate for day trades, in my opinion, right? Or very brief swing trades. They're not really; those are not investing levels. The investing levels are going to be your major levels, and obviously you're not going to short, right? That's usually not an investment. So that means the resistance levels are not going to be counted in on that, right? The resistance level, the broad levels are going to be for taking profits, right? The major support levels are your investment levels, and even 100K I'm hesitant with, right? I'd prefer to see something like 95K, but I don't know if we're going to get back there. Okay, if we do, then that's meaningful. But remember, so have the inflection points in mind. Remember, an inflection point is just a reference point. It's a place for you to start paying attention. If we're not at one of those points, then there's nothing for you to do, in my opinion, on this time frame. If you're a day trader, that's another story, right? Then you're going to be looking at other levels, which are going to carry another type of weight. But of course, they're not going to carry the type of weight that this level, this time frame carries. Does that make sense? So let me know if you guys have questions about that, okay? Or if you're unsure about that. All right, so I'm going to move along here. Let's jump over to the S&P. I mean, this S&P has been just nonsensical. Let's take a look. Let's start with SPX. Okay, hold on here. SPX. Yeah, so this is the index. Okay, this is the index. This is the big contract basically. This doesn't have an underlying. Let's see where we're closing. 68.76. It's up 84 points today. Okay, I mean, this is ridiculous. Look at these candles. Right, the one before this was Friday. This was Friday over here. We're just gapping, right? This thing is just gapping. So I don't know, man. I don't believe that it can sustain this type of acceleration. Usually, when you see something like this, usually it's like this is when you're coming to exhaustion. I mean, let's take a look at the SPY. Maybe it'll make more sense that way. I mean, look at this. This thing is up 8 points today. Okay, which is uh, it's going to be the same idea as the SPX, right? It's just it's a smaller magnitude, a smaller contract, right? This is the ETF. But look at this. Look at this gap, right? This thing rarely gaps. I mean, look at this. That's meaningful. This doesn't do that very often. So, yeah, it is. It's just nonsensical. How much more can this thing go? I mean, look at this. Just in 3 days, this thing has gone. Let me pull my little ruler out over here. What is this? 18 points in 3 days. That's huge for this thing. In 3 days. So my point is, the more it does this, the more likely it's going to pull back. Okay, so don't get sucked into this. When you see this, you're going to see a lot of people come out with S&P all-time high, Santa rally. I mean, it's a little early for the Santa rally. Like I talked about this move here, and I said this could be the beginning of this could be the bottom of the Santa rally. But man, I wasn't expecting. We're not even in November yet. Like, come on, man. So when I see stuff like this, I find this market to be very, very hard to deal with because it's like it keeps going up without you, right? So it's very easy to fall into that mindset of missing out. Very easy. Because every day you're like, okay, it'll pull back tomorrow. And it never pulls back. It just keeps going and going and going. And you're like, man, when's it going to stop? Right? And by the time you get sucked in, this is what happens to me. When you get sucked in, you're like, I can't take it anymore. I'm buying some. That's the top. Okay, that's the top. So, a chart. The only thing a chart can help us here at this point is, this could be what's called an island reversal. Because basically you get like this it's like in the middle of nowhere here, and you have this huge gap that's likely to get filled. Maybe we get that filled on the FOMC meeting. I don't know. But are we going to get one of these? Like, are we going to get something like that? Are we going to get a massive pin bar? Take a look at the weekly chart. I mean, look at this. That's the weekly. Okay? That's the weekly. We haven't gapped like this since back here. Look, there's a gap back there. Look at that. I mean, those gaps are very meaningful. All right. And they're likely to get closed. This gap over here never got closed. You see that? But that's at a bottom. This came off of a low. Okay? Like what separates these two gaps is, when this gap occurred here, at that time, we were looking at this as the high. So that was nearer the high, right? This one gapped into all-time highs. So I believe that this one is much more likely to get filled. While this one was just coming off, like this one was still coming off the bottom basically, and was accelerating, right? This one gapped into all-time highs. I don't know what you guys think of that. Trader, why would SPX not go up? Well, I agree with that. Like, why would it not go up? But at this rate, like, I don't know. I just believe that the risk as it continues higher, it's just going to become exhausted. Even in the face of all this good stuff, there has to be minor pullbacks. I mean, this is weekly, we rarely get red candles on this thing. We rarely touch supports. Hey, Grego. So, I understand that, like, the fundamentals behind it, and I understand we're going to be swimming in cheap money. I get that. But what bothers me about this is the vulnerability. Because, again, all it takes is just some little unexpected surprise, and this thing is minus 20 points, like, in a day. Right? So that's why, if there are any opportunities where you get some type of larger red candle, that's a possible buying opportunity, because this thing doesn't pull back. Like, there's just no pulling back on this thing. It's just nuts. But my argument also is, how could you buy up here? How could you buy stocks up here? How could you buy Nasdaq, S&P stocks? How could you buy them when all you're looking at is more likely pullback than continuing higher at this rate? Right? If I'm going to buy, I'd rather buy the pullback. I've been wanting to buy, but I never get the chance to buy. I wasn't going to buy this, even though that was a nice bottom there, right? I wasn't going to buy that because I figured maybe we had a little more room. The market prices in the most optimistic scenario. That could be, but I'm always a contrarian. So when I never buy highs. I just can't do it. Not even one share. I just can't do it. And we don't stay at lows long enough. We were there for one day, and then we just started working our way higher. So what are you going to do? All I know is, I believe, even though we have the ideal scenario for this constant up, I just think it's just risk. It's high. It's very high risk to start now. Now if you're in something, great. Try to ride as long as you can. But if you're not in something, the Nasdaq looks just as ridiculous. Like, we take a look at, let's see, we could look at NSX. No, how about we could just take a look at, like, NQ1. This is going to be delayed, but still, doesn't matter. We're not looking at 1 minute charts. Look at this. I mean, where we're at today, we're up like 500 points almost. But right. So I mean, I wouldn't be banging things out. Like, there's nothing bearish at the moment. It's just high risk for to take more risk is high here. That's my point. Like, I prefer, the only way I could really use this chart for any type of helpful information is look at the old resistance and say, okay, there's a support level, right? That's 25,300 area, 350 on the Nasdaq futures, right? You could look at the SPY if you're looking at the SPYs, right? And it's the same chart. I mean, as you can see, it's the same chart. You just look at the level, right? Where's our level? This was our old resistance right here. What is that? 673, 674. Okay. And right now we're at 685, right? So what is that? Just over 10 points, or maybe a 10-point pullback. that might be a good place, right? That's your first support. The next support would be this area below it, right? That's your next support, which is 651. So if we were to see something like that, that area, this would be at least swing trade opportunities, at least. This area here, at least. Also, you may be getting a head and shoulders in that scenario too, because if the price pulls back to 650 and it's symmetrical, you'll have your head, right? You'll have your shoulder, and then maybe you get another shoulder. I don't know. I don't put a lot of weight into those anyway, but I'm just saying, I'm looking at the supports if we can get one, right? And there's only two supports, the previous resistance and the actual support. That's it. That's all you could do with those. All right. If you're looking for, maybe you're looking to swing trade a stock or something like that, some stocks are going to be more relative or more sensitive to the S&P. They're going to have a higher correlation to the S&P, while others may not. Right. So if it's one of the S&P stocks or something that correlates high with it, then you can play the same game with your stock. But for me, I'd rather just trade the SPY or the Qs, right? Because it's just easier. So anyway, but there's nothing to do here. Okay, let's jump over to the bond market real quick. All right, ZN1. And by the way, a situation like this with the S&P or the Nasdaq might be good for an aggressive vertical spread, a bear spread, premium selling spread, a short premium spread. Sell the call, buy an upper call, right? But you do it out of the money, right? Because you're probably going to get some decent premiums, and you don't go. You go maybe 2 weeks out, 3 weeks out, because all you need is a minor pullback, right? And you're making money with those. But if it keeps going up in a straight line, you're going to lose. But what are the chances it's going to keep going in a straight line? I mean, so that's why if you short, like for example, SPX, let's say you short a call 100 points out of the money from the current price, 100 points higher, right? And then you buy a call on top of that. The chances of that making money, in my opinion, are pretty high, especially if you only do it like 2 weeks out, because the time value is decaying the fastest, right? In front month options. So that would be like front month, those would be like front month options, and only 2 weeks out or 3 weeks out. And the chances of S&P going through those prices in the next couple of days, 100 points. I know we've done almost 100 points since Friday, which is ridiculous. But how can it really sustain that rate? Even if it goes up slowly, maybe it just slows up and it starts to starts to hesitate and whatever. You get an inside bar, you get like a small pin bar. That wasted time is where you make the money. Okay. So as long as you're far enough, that's why in this type of situation, that's the strategy that I lean toward is sell calls out of the money, not at the money, out of the money, because you're just selling pure time value. One little hiccup and that thing you're going to make money on it, most likely. Okay. Because remember, when you're short premium, all you need is the market to do nothing or go your way. Right? If it does nothing, so basically works against you just a little bit, you're actually going to make money because it needs to go far against you through your spread before you can even lose money, right? And if you do it in a relatively short period of time, like 2 weeks, what is going on with my camera here today, man? I got to fix that again. This thing is driving me crazy. Hold on. I had this thing fixed before. I gotta it's like changing on its own or something. I don't understand what's going on with this thing. Why is the camera acting like this today? I don't know. Okay, let me adjust that. Man, like I haven't had these problems before, and it's like all of a sudden it's acting like if I click on this and then I do this, all right, I'll do that. Man. All right, sorry about that. Anyway, all right, so you guys get my point with this? All right, so now here's ZN1, right? What's happening here? This is the 10-year note. This is the price of the 10-year note. I mean, this thing's up today. It's up 0.03%. It's up a little bit. I don't know what's going on here with this. I mean, we're flirting with this resistance, right? If this continues higher, If price continues higher, which, if this is a higher low over here, then it's poised to go higher and we break this resistance, that's going to mean lower yields, right? Let's take a look at the yield. US 10, and that's all in line with the Fed talk, right? With the Fed situation. Right. So we should be seeing lower yields. Here's the yield. Let's go to the weekly. Here's the weekly yield. Right. So this should be going lower. But again, we haven't broken anything yet. Okay. We have that level and we have this level. We haven't broken anything. So, what do we do? Like, the Fed will give us some clarity maybe on Wednesday. We know they're going to cut, but what they say at their press conference can have an effect on this. Watch those levels, right? What you don't want, what will be bearish is if you see this. You will not see that in one day. Okay. Something really dramatic. He'd have to say something really dramatic to see something like that. Okay. But what we should be seeing is prices or yields working its way to the lower part of the range and eventually break. That's what we should be doing based on all the talk. Okay, the cutting the rates, the balance sheet expansion, that's what we should be doing. That's lower yields. But remember, the 10-year note trades in a free market and the Fed can only really interfere with it. I mean, they have to do their quantitative easing. That's what will have more of an effect compared to their rate cuts. The rate cuts don't have a dramatic effect on this, but they do have some effect. Does that make sense? So if this thing starts breaking resistances, that's the red flag. Okay. And I don't, that's much less likely. But if you see that in the next few months or whatever, that's when, you're going to see problems. Most likely the stock market would be selling off in that type of situation as well. I don't see how that's going to be with all this talk of just easy money. Okay. So we should see, so that gives you something to look at, right? We should see rates going lower and breaking supports. If you don't see that, then understand that could be beginning of a problem, right? If we start breaking resistances, most likely we're seeing problems. Most likely there's some kind of catalyst that's happening that's causing that, and that's where you can expect more problems. All right, so that's where I think the bond market and the yields are a good gauge that a lot of people don't really pay attention to. They just rely on some talking head on the financial news to tell, hey, the yields are there, and then here's the expert over here, and that's what people rely on. No, just look at the chart. The chart will tell you before the talking head gets to it. All right. Anyway, all right, let's move along. Let's take a look at gold. Now, gold has been pulling back, right? And then once I do gold and oil, then we'll get to your requests. All right. So look at gold. Now I know people are complaining, gold pulling back. Hey, I don't understand. I bought the top and now it's pulling back. This is what I mean, like Kai, like with the S&P. There's no reason for gold to be doing this. It was simply overbought, in my opinion. None of the fundamentals of gold have changed, right? So why the dramatic pullback? Too many people were long. Too much hype. I suspect the S&P and the Nasdaq will have a similar thing. Now, is gold going to pull all the way back to here? I doubt it. I mean, it can, but I doubt it. It's just nothing fundamentally has changed. So pullbacks like this are really buying opportunities. I mean, it's minus 121 points. I mean, this thing is getting hammered right now, for all the gold sissies who can't handle it because they bought it up here, right? That's what I mean. Like this is precisely why I have a problem with new highs, right? Especially when it's just on pretty much a lot of it's just like hot air, in my opinion. Yes, like fundamentals agree with it, but we're just too far. It's moving too fast, and that's a red flag because that means it's more likely to exhaust. I mean, look, imagine, you couldn't hold anymore, and I gotta buy gold. I'm going to miss out. Gold is going to go to 10,000. I'm going to miss out, and you buy it in that candle, right? This is weekly. Maybe you bought it that Monday, right? At the open, you bought it Monday, and by the close of the week, you're like, wow, I'm up 237 points on gold. I am a genius. And now it's back to where you bought it, slightly lower than that. Okay. Are you going to get out of your gold? Most likely not. Now you're going to take the risk because, well, gold is generally strong. Now you're going to try to hold on. This is the same problem that I see with the S&P. Same exact thing. Because there's really no reason for gold to be doing this. It's just it gets overheated, right? It just gets exhausted. It's a sentiment thing. Too many people were long, right? So, and maybe that comment that Alex mentioned earlier, that guy said gold is better than Bitcoin and blah blah blah, and gold sells off. Maybe because that was just a sign that it was the party was over when someone comes out. It's like when Kramer says something. They always say just do the opposite and you'll make money when he comes out and says things. So that's a sentiment thing. So again, this point, what do we do with gold? What do you do with this thing? Look for support levels, right? Now your max support, I think, is this what is this 34.46? I just have a hard time believing based on its strength and based on what we've seen fundamentally, with all the talk that we've seen. I just think it's low probability that we pull back that far. Okay. So where can we pull back to? A good spot to look for is the 50% point, right? Look at the 50%. What is that? Around 38.40. That would be a good spot. 38.40. That's around here somewhere. That would be an interesting level. Maybe slightly lower. Okay. Maybe slightly lower. 37 even, around there. Those would be good places to look for reversals in gold for longs, right? Also, great options play in those areas. Bull call spreads, or bull put spreads, where you're shorting the put, but you're buying one below it, right? Any pop up in gold, those are likely to be profitable, right? I know UTXO was doing he was doing bear spreads. He was doing the bear put spreads, which are bullish positions. Right, you're basically selling a put with protection. That's what a bull put spread is. And this thing starts pushing those levels and starts to hesitate. Right, those might be a good choice. It's like selling put spreads, in this consolidation, right? But out of the money, it's the price is above the put spread. You sell them out of the money. Any little bump up or whatever, that thing becomes worthless, right? Again, because you're selling short periods of time, 2 weeks, 3 weeks, usually not more than that. 1 week, maybe, right? So, because you want time to go, you want time to evaporate in your favor. So you do short time durations, not long ones. The long ones, that's for what I like to do is if I'm doing a long premium type of spread, that's when I'll go 90 days out, right? Because I need that time I don't want the time decay to be accelerated. So that's why I'll go further out. I'll pay more for that, but I do a vertical spread, make it cheaper. Anyway, this is not an options lesson, but you guys know what I'm saying. So watch those levels for gold. If for some reason gold pulls all the way back to that support over here, that's going to be a buying opportunity, at least a brief one. Even if gold can't make new highs after that, there'll at least be an attempt. If you come off that support, watch again this 50% point, that area, right? That 38 area is likely to be tested again, right? Even if it can't make it up to new highs, there's still profit opportunities in this thing, right? So pullbacks are an opportunity. People shouldn't be crying. They should be looking for, oh, now I should be looking for longs. Now I should be watching, not when it makes new high after new high after new high after new high, because you don't know where it's going to turn, right? Like I would have said, don't buy this over here. And you'd say, well, you're a moron. Look how much higher it went. Yes, that time it went, right? But then if you follow your same philosophy and you bought over here or over here, now you still be up something, but you've given back a bunch because the risk is greater the higher it goes. And even worse, with that philosophy, you may have bought it up here. Okay. And that's what I like to avoid. So anyway, that's gold. Let me know if you have any questions about that. But generally, gold's bullish. There's not much else we could say about it. We could use a daily chart to kind of get more granular, right? You have this little lower high. Okay, cool. So it's a 3-leg pullback. Doesn't mean anything. I certainly would not characterize gold as bearish. Definitely not. It's a buying opportunity. you know, and silver will probably be very similar. We can take a quick look at silver, XAG, USD. Silver is usually a little more dramatic. Look at that. Where are we at right now? 46. I mean, this is coming off of 54. Man. Yeah, silver is much more dramatic, but silver is cheaper, right? So again, it's the same deal with silver. Look for that 50% point. What is that? 45 even. That's a nice whole number. It doesn't mean, remember, it doesn't mean you just step in front of it and just buy it there. You wait for some type of price action confirmation, right? That's the key. And that allows you to define your risk. And I think for situations like this, the best way to go is options, right? Just vertical spreads, because your risk is tightly calculated. You know what your risk is. You know what you're going to lose if you're wrong. And you don't have to worry about getting stopped out, because if it goes against you and you take your max loss, all right, it's fixed. Right? If silver goes all the way back to 30, you can't lose more than your fixed loss that you've determined at the time of you open the position. Right? That's the great thing about vertical spreads. Everything is fixed. So you don't get stopped out, which means if it fakes you out and it goes a little bit lower where it would have stopped you out, but then it turns around and it's green, you're still in it, right? As long as you bought enough time or the position has enough time. Anyway, yeah, I agree, Alex. A local top, not the actual top. Yeah, it's, and people just, they over exaggerate things. So let's take a look at, all right, let's take a look at oil. All right, CO1. Guys, do you remember my talk on oil the week before? Do you guys remember? We pulled up this oil chart on the weekly, and I said, hey, man, this looks like a long. Anyone take that long? Because oil has got, we were talking about that a week ago here at this level. I don't know if you guys remember that. And I'm like, man, this looks like an attractive long. I think, and then of course, Russia sanctions come out, right? A couple of days after. I think Barron was watching my stream. Someone was watching my stream. Maybe it was maybe either one of the kids, or maybe it was the president himself. Someone was watching my stream, and they said, "Oh, what a great price to buy oil! Let's put out Russia sanctions, because oil." Right? I mean, I called it here right at the bottom. I'm like, man, I said, for you contrarians, oil looks like a great place to go long. So I think someone from the administration must have agreed, and they came out with Russia sanctions, because I don't have any inside information. I don't have any inside scoop to the White House stuff. So one of them must have been watching me. That would be cool, right? If I got a call from Barron and he was like, yeah, I was watching you. So thanks to you, we made $1 billion because, we saw the bottom that you called in oil. All right, great. Now maybe you can give me a commission or something. So anyway, yeah. Oh, nice. Okay. You closed your puts. Nice. Okay, so you were able to avoid that. So that was helpful. Well, so when I saw that, I was like, man, how come I wasn't long oil? I'm the one that saw it. I wasn't long any oil, right? And anyway, I was looking at the USO, which, this USO is the ETF, and USO is a little problematic in the sense that if there's what's called a contango situation, then USO can lose money even though it's going in your favor. But I don't think we have that contango situation. So, but USO could be a little complex that way. But that's the easier way to get involved, I think, in my opinion, because it's a stock, right? Rather than CL options. I was looking at the CL options. I mean, they're a little, they're a little they're a little wide. And there's no QM is a small contract. I haven't seen any QM options. So how do you guys trade oil with options? Do you use USO or do you use something else? So anyway, there's a double bottom now in oil. This is the weekly. Let's look at the daily. All right, so there was that Russia sanction thing. I mean, since then, not much has happened. It's been just sort of consolidating here. So, and you're back at this old support, right, which may act as a resistance. So I wouldn't be in a hurry to look for longs right now. Maybe on some maybe if there's a pullback, maybe you get a higher low or something over the next few days. Like oil is worth watching for something like that. If you want to take chances here, I mean, then you're looking at the short put, right? The short put spread lower, or that you want to do the short call spread higher, right? I mean, you'd have to probably be way out here somewhere. Because again, if this thing's coming off its low, and then if there's any kind of thing with oil, when there's news in oil and it spikes hard, you really don't want to be in the wrong side of that. you know. So how do you guys trade oil? I'm just curious. Because again, I would use USO, but maybe there are better ways. Because I want the extra juice for oil. I just look at all the. Oh, okay. So you look at the oil. You look at the oil companies. Okay, that's cool. I mean, they all should react to oil as well. It's just when there's news in oil and it's geopolitical, whatever. I mean, oil can get stupid really fast. Okay, and that's why if you're doing options, you definitely want to have protection. It's just like the thing with the short premium options, the risk is always asymmetrical, meaning you're never going to see 2-to-1 reward risk in your favor on a short premium option. You get that on long premium options. So you do okay, DJ. Yeah, I look at the same thing. I look at USO. It's just easier. But there are some problems with it. Like you could Google that and you can learn firsthand what the limitations are. But I still prefer USO because of the simplicity. I don't mind that there may be, if we're in a contango situation, blah 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 blah. It's like, all right, whatever. So I like to try to keep things simple. It's good to be aware of, though. Anyway, my point is, when you're shorting options, right, selling the put, selling the call, you want to make sure you use protection, because especially with oil, because when it gets stupid fast, and then you get stuck in it. So at least you're obviously, my point that I was making is the risk is asymmetrical. You're always, when you're wrong on a short premium, you're always going to lose more than what you could have made. Right? That's just always the case. The trade-off is the probability of you making money should be greater. Right? So, you take in $100, but you're risking 300 or 400, right? But the probability of you making that $100 should be greater. Right? So that's the trade-off. That's why it's worthwhile, especially if you're doing it at good levels. Right? Like, for example, if you opened up SPX short call 100 points higher from now, 100 points higher, 2 weeks to go. You mean to tell me we're going to go in a straight line, 100 more points on the SPX in 2 weeks? I think it can happen, but it's a low probability. Even if it goes against you, goes the wrong way, but it doesn't reach 100 points, that option is worthless, right? Even if it goes 99 points, but never makes the 100 points, the option will be worthless. Okay, which means you keep the premium. That's why I like doing those in these situations. Okay, that's all I can really say about oil. So if oil pulls back, watch for something, because if that escalates, that Russia thing, blah blah blah, Russia sanctions, blah blah blah, this thing can start getting back to stupid prices, possibly. Now, for some reason, before that, oil has been very slow, and there's been not much. It's been very sluggish and not doing anything, which I think is strange. Anyway, all right, that's oil. So I covered all the main ones. Let me start jumping over to the ones that you requested. I know DJ had one. So let's start with, so I covered Bitcoin because Savi asked for Bitcoin. Let me go back to DJ. DJ had one over here. Let's take a look. Let's go back. So which one was it, DJ? Trox. TROX. Long. Okay. Stock. Let's take a look. And I'm going to turn the Trade Scanner Pro on for that to see if the Trade Scanner Pro says anything. All right. So TROX. No, that's not it. Trox. Okay, there we go. So let's see. What do they do? I don't know what they do. All right. Anyway, it's a $3 stock, or almost $4 stock. Now you're thinking Trox long. All right. Let's go to the weekly. Man, do I have the right stock here? They actually pay out on such a cheap stock? Let's see, how much was this stock at one time? Let's look back here a bit. Wow, this stock was expensive. Well, not really. $20. All right. Let's go back. Let's go back further. Let's just see. Where's the stock coming from? So DJ, you want to tell us what they do? So it looks like the stock was at one point $37, $38. Looks like that goes back. Wow. That goes back to 2013. It's a long time, man. All right. So the stock's gotten beaten up clearly. I see lower highs, lower lows. I see bearish trend. All right. So you're thinking long. Well, here's what I say. It's a little early. It's early. Like I understand why, because maybe this thing is bottoming, maybe. And man, you got quite a range here. I mean, wow. You're looking at, I mean, if this thing gets back to like its halfway point, or even you're looking at like $10 a share, something like that. Just rounded a bit. That's $7 higher. So I could see the potential. I mean, look at that. That would be like your profit objective, something like that. Right. So let's just make it a round number. Let's just go right to $10. Right. $10 even is right there. So that's actually even more within reach. But here's the thing. The structure hasn't changed yet. Remember, this is the weekly time frame. So what we see here, DJ, is you have the attempt, right? You have the push higher, possibly the initial move, but it got stuck at this resistance area, right? This old support. I mean, this lower high consolidation situation, it respected it, right? So you see that with a pin bar. Look at that on the weekly. See that? So that right there, we can highlight that right there. That right there still signals weakness technically. Okay. Um, it processed titanium ore. Oh, a rare earth. I see. Right, and we all know that was the whole Trump drama had to do with that, the rare earth. So I see this thing can change quickly if that really gets out of hand. Right. So if you're anticipating a change in fundamentals because of that, then yeah, then this chart doesn't really mean much. Right. If that's a rare earth play, this thing could just change out of nowhere, right? So if you want to, that might for that idea alone, maybe it's worth a starter position, something small, right? Whatever, maybe 100 shares, maybe 50 shares, I don't know, something like that. It's a cheap stock, but the structural change is still not there. You need to break this high. Okay, so that's $4.84. How long ago was that? Okay, it was a little over a month ago. And then it made push this low in the beginning of October. All right, so I mean, especially after that tweet situation, like this thing should be definitely doing better, I would think. But we all know it's always usually a big bluff. But $10 worth of stock, okay, those are small bites, definitely. You're not going to have a hard time with that. So if it breaks the low, DJ, if it breaks that low right there, then that might be a signal to just hold off, right? No need to continue to buy. Or if you want to buy at that low or put limit orders below that low, let's see, what is that number? 309. So basically 3 even, right? You push below 3 even, maybe you want to buy a little bit more. Maybe if it pushes into the twos, maybe you want to take one more bite, right? But you don't want to keep doing it because it can go to zero, right? So you take a couple of aggressive bites if it pushes those new lows, and then that's it. Like you have to stop at some point. You have to just stop buying, right? At some point, you have to have that in your plan, and then once it changes its structure, which is this level right here, 510, you could round that to 5, right? This thing breaks 5. That may be a good time to begin to add to the position now while it's going in your favor rather than while it's going against you, right? If you build the position while it's going against you to a point and then you stop, right? And then you have your position and that's that, right? But when it changes its tune and breaks 5, like maybe some news comes out and in one day it's at like 550, and you're like, oh, I missed it. No, you haven't missed it. You just, now it's a signal for you to continue to add, like you add some, whatever the high is, it doesn't matter. You're doing small pieces. So, and you're coming off the bottom. So it's not like, even if you buy 550 and it pulls back to 5, who cares? Right? Your core position is doing well. There's a lawsuit. Oh, okay. So that's actually good, DJ, because if the lawsuit comes out favorable, you're probably going to see the change, right? So you're basically betting on that change, unless of course you know someone who works there, or maybe you know someone at the White House. 500 max, okay. So if it goes to zero, you lose $500. All right, no problem. But if this thing works, this thing can easily go to $10, right? So I think it's a good play. Again, you're following this closely. But this is where watch for unusual options situations in a stock like this. There's some brokers out there, or some whatever. You could get like an app or whatever, and you can see unusual options. So if a lot of calls are being bought, like a larger amount of calls more than usual, that could be a sign that something is about to change. Because usually, an insider knows something, like your friend Nancy, and unusual options activity then ensues, and next thing you know, favorable court case, and then this thing looks like this, right? So unusual put situation, that could be, right? If they know something, maybe if you could see unusual short puts. But probably in a situation like this, you probably, if it was going to spike, you would probably see calls, right, in advance of some kind of legal announcement or something like that, because that's what will change this thing. And on the chart, you'll see the structure break. Okay, so those are things to look for. You found an unusually short. Okay. Well, you found something with unusual puts. Insider short. Okay. Yeah, let's take a look. So you see, we got nothing on the Trade Scanner Pro, not in these large time frames. Let's take a look at a small time frame. Does that make sense, DJ? Here's something. Trade Scanner Pro is showing us something here. Let's see what it says. It's showing us a short on the 4-hour. Interesting. A short, which is in play. Now, you guys remember, I don't like to take the trade on the actual entry line. You wait for a retest or a re-break of it, or you look for some other type of signal inside the risk gap, right? If you were going to short this, but this is a $3 stock. Like, I would not be in a hurry to short a $3 stock. Remember, the Trade Scanner Pro can't see any of the fundamental stuff. All it's looking at is momentum, right? And changes in momentum. So that's going to be irrelevant to any type of fundamental changes. AGIO. Okay, let's take a look. Yeah, yeah. She's a market maker or something. Something. A massive short. Let's say AGIO. Several millions worth. Interesting. Oh, that's interesting. Let's take a look. AGIO. Okay, so here's an insider one, everyone, from Kai. Kai found some unusual options. Now, Kai, what was the source of the unusual options? Is it like an app that you use, or is it like a broker that gives you that type of, or is it something like, trade ideas? Or I'm just curious, because there are many sources for that. Too risky. So, all right, let's take a look at the daily time frame. So DJ, does that make sense before we get heavy into this AGIO over here? Does that make sense for Trox? Do you have any other questions about it? So, okay, a pharmaceutical company here. Looks like the Trade Scanner Pro has been long for a couple of weeks, it looks like, and you're about halfway to the profit objective. That's interesting. So January puts, a few $1 million worth, were bought for a short. What was the strike on that? Do you know? I'd love to know. And this thing it's a $43 stock. So, I mean, let's take a look at the weekly. Okay. So interestingly enough, I see, look at this, Kai. Old support, new resistance. I mean, technically you have that. Usually when you see insider activity, it's not based on a chart. It was out of the money. Okay. Remember, insider activity is because they know something. They know about a court case. They know about something inside, blah, blah, blah. They're not sitting at a chart and taking a few $1 million worth of a position based on a chart pattern, right? But the chart tells us that there is an old resistance here. It's an old support, I'm sorry, old support, which is a new resistance. It's also in a location for a failed high. So, I mean, the short makes sense technically. Okay. The short makes sense, Kai. I could understand the argument for the short. Deep out of the money puts long. I mean, this thing can easily pull back. Let's see, to around this area right here, right? The 50% area. $34, $35, and this thing's at 43. I mean, that's not huge, but that's not bad. Right? A good $7 or $8 pullback. I mean, if you're buying that would be out of the money, pretty far out of the money. But $10 would be even more out of the money. But that's an interesting one. So, guys, so based on what Kai is telling us here, he found an unusual options activity on this thing. Okay, yeah, I mean that's the whole idea. Do you now, Kai? I'm just curious. You don't have to tell us if you don't want. But was there a particular app that you use for that, or was it like a broker, or like some other source? I'm just curious. But if you don't want it, you don't have to answer that if you don't want. Anyway, there are plenty of apps out there and things that you can get that the, I think the other was 20. 20 was the strike? Oh, 30 and 20. Wow, that's pretty deep out of the money. So there are apps out there that track these, whale movements, if you want to call them, right? Like in the coin world, they'll call it a whale or whatever. But you have an insider, they know something, so they take on a huge position in calls or puts that just it's unusual. Oh, okay. We talked about this weeks ago. I just found the chart on today. Okay, cool. It's interesting to know. Right. So that option on activity can be a tip off that some type of inside information is known and something may occur that that you could find out in advance. Now, it doesn't always work out like that. Sometimes the option thing could be some sort of other type of transaction or whatever, or they could unwind some other type of position. I mean, it could be a number of things, but it's still unusual. So, as far as the argument goes, technically, I mean, it makes sense. That short makes sense from its current location, and pulling all the way back to 30. I mean, it can do it. I mean, look at this. Look at this over here. I mean, look at this move, right? All you need is one of those, and you're making money, right? And that comes off on news. This stock doesn't receive single position worth of millions usually. Okay. Okay. Yeah, if you want to share what app, but again, DJ, like there are many out there because I've looked into this. There are many apps out there. Some of them you pay for, some of them have ads, whatever, but they track the unusual options activity. Like I know, for example, Trade Ideas, which is it's like a piece of software for to day trade stocks. It has an unusual options activity function or whatever, and you can look up, you can see stocks, a whole list of stocks that have unusual options activity. But Trade Ideas is ridiculously expensive, right? They want at least like $120 or $130 a month, if not more, for their platform, which I've used and I have not. I mean, it's if you day trade stocks all day, I guess it could be helpful, but I just found it to be a lot of stuff you don't need for that amount of money. So anyway, all right. So thanks for sharing AGIO. So we'll definitely keep an eye on this. Would be worth tracking. Keep in mind, if all it takes is one news item, right? So it's not like it moves that way in time. It's just one news item, not a whole lot of volume, right? So I guess that's what makes it unusual. That makes the volume situation even more of a heads up, right? So certainly worth watching. Keep this keep this on the radar. But like I said, all it takes is just one piece of news, and this thing it'll look like this. And you'll say, "Wow, that insider knew something." And remember, in the way in the environment that we're in now, it's like insiders are just doing this blatantly. There's clearly no accountability. No one gets in trouble. So it's the people are just doing it. Because remember, when you do it in the stock market, the FBI can easily find out who you are and knock on your door. When you're doing it in Bitcoin, that's another story because it's supposed to be anonymous, right? But in the stock market, you do it. The market maker will call the FBI and be like, "Hey, man, I just got screwed on these options. Someone must know something." And then they look you up and they come knocking on your door. Okay, that guy Patel, he's going to be knocking on your door. They got those gambling guys, right? They got the sports guys. So they got them, but for some reason they haven't gotten. They still missed the stock ones, right? The AMD one, the Nobel Prize one. We see zero change between admins in terms of between admins. Yeah, I mean, they report Thursday. Okay, so it's like people. That's good to know, Kai. They report on Thursday. Huh? Maybe someone knows something about the report. I don't know, but someone knows something, right? So I'm just saying, people are not afraid to do it and just make it obvious. Because if you're going to do it, man, like the stock market's not exactly the best place to be doing it, unless you know you're going to get away with it. I don't know. Like your friend Pelosi, she knows she can get away with it. The FBI is not going to be knocked. She makes sure the FBI gets paid, well, she used to, right? She made sure they got their salary. So anyway, all right. Thanks for sharing, Kai. This is certainly a good one for the radar. AGIO, and remember they're reporting on Thursday. So 30 and 20 are where the unusual options are occurring. All right, so that's that. All right, let's go back to Bitcoin. I think I covered all the main ones, right? We covered the requests here. All right, guys. So I think we're pretty clear on everything. You guys have any questions? Any questions? That's weekly Bitcoin. Any questions about anything? Look how this pin bar is playing out. Interesting. This is going to most likely close like this. Right, it happens all the time, right? Blue, red, right. Well, unless you are Martha Stewart, then you go to jail. They got her, but they got her for getting out of a position, not for getting into a position. Right? They got her for dumping for getting out before everyone else. She went to jail. I guess someone wasn't happy with her content or something. I don't know. They weren't happy with her I don't know, whatever the stuff that she used to do. The nice living room stuff for people who have nothing else better to do. So anyway, yeah, you're right, Kai. But especially now, like you could just do it. If you know some inside information, you can just do it. I mean, what do you think the betting sites, the event betting is all about, right? They incentivize inside information. So if you're an insider and you could do it anonymously, you go on there and you say, "Hey, will Google beat their next report by blah, blah, blah?" And then you could bet on it. "Hey, Slow, how are you?" They step out of line, right? Oh no, DJ, it's best to send me an email. It's the easiest way. If you want to reach me, just send me an email because I get those the fastest. The first and the fastest. That's the best way. Mark at markpremarkets.com. From Mexico, Mexico. Viva la Mexico. El México. Viva el México. Me encanta el México. Mucho gusto. I could practice my Spanish now. Mi practico mi español ahora. ¿Te gusta? All right. I don't get to practice my Spanish enough. You need to come here more slow so I can practice my Spanish. I can say random Spanish words. Solamente las palabras malas. All right. You got that, DJ? You could just email me, Mark at markpremarkets, and I'll get your email. I get that the fastest. Anyone else that has any questions, you can also contact me that way as well. Also, yeah, I'll just leave you with that. I got to wrap this up. All right, guys. So again, thank you for taking the time with me here today. I hope you found this stream helpful. All right, cool. I hope you found this stream helpful, and we'll do this again next Monday, okay? So enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.